Hello, in this video we're going to look at the concepts of economic profit and accounting profit and do a couple of examples. So we're going to start here with an owner of a lumber store who reported the following financials for last year. If the owner closed the store, he would be working at Home Depot earning $80,000 a year and be able to rent the store's property, the building and land for $50,000 a year. So the owner's financials, revenues of $1 million for the year, and some of the cost, wages paid to store employees, utilities, insurance expenses, and purchases of supplies, the lumber, paint, and the drywall that this store sold to customers. This owner had to buy it from his wholesalers, and he spent $500,000 on that. So let's calculate accounting profit. Accounting profit is revenue minus explicit cost. What is an explicit cost? It is a cost that involves spending money. So if the firm is buying inputs and a check is being written for those inputs, money is changing hands, it is an explicit cost. So here for accounting profit, we got $1 million of revenue. We're going to subtract out these explicit costs. $300,000 for wages, $10,000 for utilities, $20,000 for insurance, and $500,000 for purchases of supplies. The accounting profit here totals $170,000. All right, let's do economic profit. Economic profit is revenue minus explicit costs. Again, remember, explicit cost is a cost that involves spending money. And we're now going to subtract out implicit cost. Implicit cost is a non-monetary opportunity cost. So money is not changing hands for an implicit cost. These are capturing foregone opportunities because this person is operating this lumber store. This person is sacrificing earning money, doing other things with his time and assets. So let's do the calculation here. Revenue $1 million, subtracting out all these explicit costs as we've seen before, this $300,000, $10,000, $20,000, and $500,000. And now these last two entries here represent the implicit cost. The $80,000 is this money that you could be earning if you weren't operating this as a lumber store. You were doing something else with your time, so you're sacrificing $80,000 of salary. So that is an implicit cost, a foregone opportunity. And you're also sacrificing the opportunity of closing the store and just renting out this property and building to others where you could be drawing $50,000 of rental income. So doing the calculation here, your economic profit is $40,000. All right, let's do another example. Jill quit her job earning $60,000 a year to open a restaurant. She took $50,000 out of her investment account that pays 4% interest per year to purchase assets for her restaurant. So these assets include tables, chairs, ovens, refrigerators, freezers, and so on. The market value of the assets at the end of the year totals $40,000. Again, at the beginning of the year, the assets were worth $50,000, what she paid for them by taking that money out of her investment account. And for the first year, her restaurant earned $300,000 in revenue and had the following cost. These would be our explicit cost. So in this example, I'm just going to jump in right to economic profit. So economic profit is revenue minus explicit cost minus implicit cost. So $300,000 of revenue minus $100,000 for purchases of supplies, $10,000 for utilities, this $20,000 for interest payments on loans, and $100,000 paid to her restaurant staff, the waiters, waitresses, and so on. And now we need to subtract out the implicit cost, the foregone opportunities. You give up earning $60,000 a year by running this restaurant, and you also sacrificed interest income. If you didn't purchase this restaurant, you would have $50,000 in your account, earning 4% interest a year. So you're sacrificing $2,000 of interest income, just 4% of $50,000. So that is an implicit cost. And this last entry here is calculating economic depreciation. You started the year with $50,000 worth of assets because of wear and tear. If you were to sell these assets at the end of the year, you would only get $40,000. So that $10,000, this difference here in parentheses, represents economic depreciation. So taken together, her economic profit here is minus $2,000. So she's incurring an economic loss. All right, that's it. I hope you found this video helpful.